Hey guys, good morning. This is Julie. Want to talk about using JATS PT for these opening ranges. A lot of us will want to know how far will price likely go during the trade session, right? Can we forecast volatility to any degree of success? So JATS PT helps with this endeavor. The way that I have constructed JATS PT on this chart is I have put the 1 hour initial balance for crude on the chart. That's between 8 and 9 a.m. Chicago time. I'm using Central Time. So between 8 and 9 a.m., I can calculate on the session open. And what that does is it will take the first hour of trading over 14 periods. You can change this period for whatever you want. If you want to do it over the last, 5 periods or 20 periods, you can make that adjustment. I just leave it at 14. That's a pretty normal, you know, average range that the indicators are tied to, your RSI, your CCI, your ATR, your stochastics, everything is operating on a 14 period range, your Donchian. So we'll just stay with that. So works pretty good. You can see that on a 5 minute bar that the range, the price opened, this orange line is a separate indicator. This is not included with the JATS PT. I have my own opening range indicator that I created that allows me to get the opening range and the Globex range. But um, so I'm just using this for demonstration purposes. This is not included in JATS PT. But JATS PT is these other lines. In fact, let me just remove that so it's not distracting you. So you can see that the bar opened and we're not exactly 100% inside this range as far as 50%. We're in the middle of it, but not precisely in the middle of that range. My calculation is a little different. Everybody calculates their volatility a little bit differently and has their own volatility model. Um, and I, it's all basically the same. We're using a bell curve. So we're looking to see, if price stays inside that first standard deviation of the range of the volatility, or if it breaks it, will it go to the 2 and the 3? And then will it go to the tails or come back in? And so on the chart, you can see that the yellow lines comprise that first standard deviation. So will it stay inside this range or will it go outside to the 2 and 3 of this time period? So you've got up and down, A and B, A for above, B for below. So on my market analyzer, I can show the PT3 points um, for what that range would be between 8 a.m. and 9 a.m. And I can divide it into 1, 2, 3, 34%, 68%, 99.7%, 95%. Um, and that's what I do here. 1, 2, 3. Um, and what we're trying to do is, determine with the PT indicator, this bottom oscillator is part of the PT indicator. On the chart, we've got it in lines for support resistance, like a bell curve. On the bottom, we show the threshold value and slope of the volatility. So if the volatility is rising and the slope is rising and you're graduating up, you're expanding your range. And like any volatility indicator, that's not necessarily indicative of long vol means long price. It means you're going long vol. It could be going short or long, but you're just expanding your range. So you're going to be looking to go to those twos and threes, right? So we can take a time frame like a 5-minute chart and get a benchmark volatility so that we know that if we're trading between the 2 and the 3, we're likely to be, going outside the 1 standard deviation, right? Because the 1 is down here. Um, Here we go. And it went to the 2. And then it turned around and gave us that volatility all the way back up to the 3 on the top end. So there was more volatility. It gives you a representation that you've got volatility coming into the market. Um, and which is, extremely, typical of your opening range, right? Your first hour of trading is usually your most volatile range of the session. But you can see how the algos, they're very much algorithmic. They trade ranges. They like these 14 period ranges. And now we can capture what that range opportunity might be and help you get to the top or bottom of these range periods within a time frame like 8 to 9 a.m. You can put this together with other time frames. So you can put a daily range on your chart. So let me put a daily open. So what I like about the PT indicator is I can measure the daily range from the close of the session or the open. They're going to be different levels, right? Because you open in the morning and you close at night. So you can see here that we're inside the 1 standard deviation, right, of the daily. So that means it's rotational. There's not really a lot going on. It's just up and down inside the first standard deviation. If we were trading outside the daily first standard deviation, see how we get the support resistance? Support resistance. If we were trading outside the daily, here we go, then we can go from the 1 to the 2. And you can see that this vol was rising right here. And it allowed us to make that push. Here it got to some low vol, and then it tried turning back up here to come back down to the 2. Finished its target. Looks like it was getting close to the end of that RTH session. So they took it to the 2nd standard deviation. I'd like to see that crude oil go down. I'd like to see it go down much lower. But here you can see that it stays inside the 1st standard deviation of the daily. And then you can see how it interplays with your opening range, that first hour of trading inside the opening range. So it's like nesting the Russia dolls, or the doll inside the doll inside the doll. So you can go from like a quarterly, monthly, weekly, daily, intraday, 1 hour IB time frame. Okay. You can even go down to a 5-minute, what was the high and low or the 1, 2, 3 of the first 5 minutes over the last 14 periods, right? You can, make the range as small or as large as you would like. And it's the same concept. The ranges can be measured this way. Here we went to the daily 2, support resistance, and then came back in. And let's go back to Friday. Here we went to the daily 3, and you can see how the support, and these are just ranges, right? So you went to the end of your daily range, Again, normal distribution, that means there wasn't something abnormal like COVID or Ukraine war when it first came out and it exploded outside the quarterly ranges. Just in a normal trading environment, these um, algos trade pretty much the range. And if, you can visualize here we broke the range and it wasn't on extremely high volatility, but it did get up to the three, right? And then it pulled back, and you can see that it went back inside to close, but it did get over its skis a little bit. And one thing that I can tell you is often what it will be looking for is like a higher time frame. Like maybe there was a weekly level, right? Something like that. So let's put a weekly, just for grins, on the chart so that I can show you this. I'm going to put a weekly open and close. And I may have to add more days to the chart. I think I only have 150, so let me put some more days on the chart. 500. That's another consideration. If you're getting into these higher time frames, you're going to have to add more days. Don't try to put, 5,000 days on a four range bar. That's not going to work. Um, and let's see if I can go back. I should have paid more attention to where that was. There's our weekly level. Here we went to the weekly ones. See that? Went down to the weekly one and bounced. Pretty cool. Here we went up to the 1 hour IB2 and came back down to the 1 hour IB3 as support. See how this works? Here we went to the weekly or daily. What is this? The lines, I have to check them. Like, what am I on, a daily, weekly? Daily. Daily 3. See that? Daily 3. And what I like about having the oscillator is I can see that it hit the daily 3 and then it rolled over, right? It came back in. You can see the slope coming back in. The volatility is decelerating. That range is rolling over. So I'm no longer trying to get to these upper ranges. So having the lifetime license that gives you the bottom oscillator is really an important part of this that you don't actually get to see when you're just subscribing to the PT Twitter. PT Twitter's good. You get the higher time frame ranges, but you can't really see this oscillator. So you can see here that it went to a PT level and bounced. So, just using daily, weekly, and the 1 hour IB range by itself, you can see that it gives you plenty of levels that it goes to. And these are not back painted. These are actual ranges. I'm not back painting or anything like that. These are actual ranges. So if you have other indicators or systems to be using with this, to give you an idea of, where to, take a trade or how to trade it, that is something that you'll have to come up with. I can't tell you where to put your trade, but I can tell you that I like to use like the first standard deviation. So this PT1, 34% of that first hour range. So I'll use the 39, right? So Friday was 39 ticks or 39, cents um, as a target and stop. So this was Friday, so you can customize the volatility. So if you look here and see um, you're at the bottom of the range, and maybe you want to start taking, you know, attempts to turn this around. How far should you go if you're just day trading? Um, you can set this to go from the low of the bar up and take your profit there, right? So the low of the bar, profit, 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 low of the bar, profit. You see how it works? Low of the bar, low of the bar, low of the bar, profit. That is one consideration to do it. Here we rolled over and you just turn it around and go from the high down. So from the high of the bar down, it didn't hit the target on that, but you would leave the trade open and there you hit your target, right? So this is just one way that you might consider using volatility as your profit and stop method. You can put this volatility um, on the bar high and low, or like on a moving average, or say you want to use a 8 EMA, you can run it off the 8 EMA. There we go, because that gets hit a lot, right? So you can use it. There you go. It would not have been hit, and you would have gotten target reached. See, going up, target reached, target reached. Here, it would not have been hit. You would have been staying in your trade, target reached. Do you see what I'm saying? You can do it like that. Volatility up and down. So there's many ways to slice and dice this data. I don't know what your risk parameters are. You may want to try, a wider range um, to day trade with, right? Or, come up with different strategies depending upon your volatility, whether you're going volatility is expanding, or do you want to wait for volatility to be contracting and try to enter. So there's different ways that you can trade this. Um, Likewise, if you're into spread trading and you just want to see where these ranges are on the threes by themselves on these time frames, so that you want to maybe see where your risk is and never hit your risk, that is something that PT indicator can also help you with. So let's put on a 30-minute chart, right? So let me do a 30-minute chart. I'll put 500 days on it and put this on none. This is crude, so I'm going to use a 60-minute bar. Crude has a tendency to have a little bit wider ranges. So we'll just use the 60-minute bar as an example. So here we can put the PT3 indicator on. And put it on the PT3 only. And I'll use a 60-minute. So you can see that we got to the bottom of the 60-minute range, and that's where it turned around and went back. You got to the top of the 60-minute range, and it turned around and went back inside. Here we broke the range, and that here's a break of the range with a close below, and that signaled the directional move going down. So here you can see that that was staying inside the 60-minute range, and then here we get to the opening range for the 60-minute bar. So this is where I turn it around to do the PT3 for the volatility envelope. So let me show you what that is. So I put it back on open, and I go from 8 a.m. to 9 a.m., right? So from 8 a.m. to 9 a.m. So now I have more of an volatility envelope to know where my 60-minute box is on my 3. And it stayed inside the box. So I can envelope price to know where price is likely to stay between 8 and 9 a.m. Likewise, I can put on another one between 9 a.m. and 10 a.m., right? So I can add a new one to go between 9 a.m. and 10 a.m. Let me do that. PT3, and I want to go 09 to 10. There we go. So now between 9 and 10 I have another envelope. And I can draw this, I can keep going until the end of the session. So to get to 1:30 p.m., so from 12:30 to 1:30, I can add another ending envelope, an end to the RTH session. I guess the old RTH for us old timers, right? And that would be 12:30, so that would be 13:30 to 12:30. There we go. So there is your volatility envelope to trade inside of. If you want to know where your football field is. And you could put the other time frames inside of it if you wanted to. Like once you get past 9 a.m., you may want to take the 9 a.m. off and look at the next one from 9 a.m. to 10, 10 to 11, 11 to 12, and then to 1:30. Or you can just do your football field for the day, which is pretty cool instead of all of that. So we can just go from 8 in the morning to 13:30. And there's your RTH session right there. So here it tells you that there's your RTH session, and you should be trading inside that range on average, right, on a normal distribution. When it breaks it, like I said, usually when you see that it does break a range, there's your, range expansion opportunity, and high degree of probability that there's going to be a higher time frame level it's trying to get to, like a weekly or a monthly range. And the thing to consider with this, look at this, it got almost all the way to, oh, it did, 7. This is a 30-minute or 60-minute range. So 60-minute range usually will go up to a 1. There we go. Um, Here we go, 1. And this can be used. You see how it got outside the 1 right there? That is pretty much the end of the road. And once it started sloping back in, you're going to go back inside your range. Um, so here we expanded the volatility. So we broke our 3. We got our range expansion. It's going straight up. And most of the time, it's going to be trying to get to that higher time frame level, a weekly, a daily, a monthly, 1, 2, or 3. So there's a daily. Here is a weekly. And I want to take a look at this. This is November 21st, 22nd, in case this shifts. And I'll put a monthly on here. Well, it just sort of went out into the middle of nowhere, didn't it? But it traded the volatility up to the 1. So that's what the algos were doing. They were trading to the 1, and then it topped out. Here's some top outs, top outs, top outs. So they were just trading to the end of their volatility, and came back in. But being able to get a ballpark, a benchmark of where you are, I think might be very helpful for you. From the largest range to the smallest, and and you can often get some excellent, ideas of whether you're on a weekly, you're on a daily, and an RTH um, level, and your volatility starts coming back down. You know that may give you a huge idea, right, to launch a trade, to go back inside the middle. Volatility is mean reverting. And if we look at that, bell curve, you can see that when it gets to the end, if it doesn't break the range and try to reach for that high end of the volatility before it comes back, snaps back, um, you can see that mean reversion coming back in once you get to the end of your ranges. So if that helps you at all, but using this on a very low time frame, like a 1 hour initial balance, or even a 5-minute opening range, or a 15-minute, I think can be very um, beneficial, and something that you might like using in your trading. If so, I had an opportunity today come up, and I said, well, someone asked me if I would put on a flash sale, and I said, well, I don't do those. I'm thinking to myself, very often, in fact, very rarely do I have a flash sale, and I just had one not too long ago. But there is the President's Day today, so I am going to offer a President's Day sale through the weekend. So if you would like to get the PT indicator or any of the other indicators, now is the time to do so. On sale through the 20th, you can get 40% off. So I'm offering a huge discount for this weekend. So I've got the PT indicator, the LRT lines, which is the linear regression lines, gives you a volatility um, using linear regression, um, about using these just like you would your other volatility indicator to measure when to come back inside. You get to the end of the volatility range for the linear regression, and or use it like a trend indicator. If you're above the main trend line, you can know that you're going to be primarily looking to go long until you hit the end of the road. Um, and I've got the market analyzer, which is a chart template with Bloodhound. Bloodhound is not included to give direction of momentum and linear regression, visual display. I've got the opening range indicator, and this is just the JATS opening range indicator, uh, giving my ranges. I've set it up for specifically that Globex and RTH period for your opening ranges, and BB Mom template, my Blau methodology for momentum. And if you do have Bloodhound, I have a Bloodhound template to go along with it. I think I just put the Bloodhound template on sale today. And the XREX also a just a methodology of using these Uniringo bars uh, with EMAs and trying to hit these triggers. And what the XREX does, cross recross, is it will actually cross the line first and then recross back up and give you a trigger live in live market condition, and that will put you in the direction, hopefully, of this directional trade. Um, and so that's available for you on sale. So a pretty good sale going on this weekend. If you would like to take advantage of any of the JATS indicators, now's the time to do so. Just come over to the home page and click this sale price link. So this will be available through Monday night. All right, guys, that's about it. Thank you so much. If you have any questions, let me know. And y'all have a great weekend. We'll see you next week. Thank you.